Hi friends, today we'll discuss a bank acquiring capital or buying equity in other companies or subsidiaries. So in normal cases, banks also they'll buy equity in other companies and subsidiary companies. So what are the limit, whether it requires any RBI approval, everything we'll discuss today. So normal company and subsidiary. Subsidiary means if a bank having more than 50% of voting shares in other company, that company will be called as subsidiary. Other companies you can invest 1%, 2%, 3% voting rights. But once more than 50% you have voting in another company, that company will be called as subsidiary company for a bank. Example, SBI owns 100% voting shares in SBI Life Insurance, 70% of SBI Mutual Fund. So for SBI, SBI Life and SBI Mutual Funds are subsidiary companies. Even SBI will be investing in other companies 1%, 2%, 0.5%. Those companies will not be called as subsidiary companies. So what is the limit? This is for the subsidiary and other companies. So X bank with their paid up capital and reserves, it should not exceed 30% of the paid up capital and reserves. At the same time, where they are investing, that company's capital, 30% of capital, whichever is less. So I'll give the calculation in next slide. So for example, in a bank, they have 100 crores capital. So 30% means 30 crores they can invest. So they are investing in one company. This is for the multiple companies aggregate. So it may be a company or subsidiary. So 30% means 9 crores. Whichever is less means they can 9 crores they can invest in aggregating companies and subsidiaries. So whichever is less. This is for the multiple. Investing in only subsidiaries, single entity. If only because the previous one is for the subsidiaries and other companies. Overall limit we have already discussed. Investing in subsidiaries. Subsidiary means bank should have 50%, more than 50% share voting. So in one entity, they can invest 10% of the paid up capital. So for example, one bank's paid up capital is 100 crores means they can invest 10% means 10 CR they can invest. If it is multiple subsidiaries and financial services companies, it will be 20%. Only subsidiaries, not other companies. We are only making the limits for subsidiary companies, and means where a company should have 50% of the voting with the bank. So multiple it is 20%. You can go up to 30% but with RBI approval. 10% yes, a single company, multiple subsidiaries 20%, and they can go up to 30% with RBI approval. So for the any limit, it may be companies plus subsidiary limit, or single or multiple, or one subsidiary, multiple subsidiary, everything, any limit, threshold limit, if it's crossing, then RBI's approval is required. And what is the control? For example, if it is a subsidiary, you should have more than 50% equity or control in that company. Banks, they can't invest other than financial subsidiaries. Not permitted except in specific sectors like IT, agriculture, finance, they can approve, but others, we want to invest vehicle manufacturing or different oil manufacturing or oil drilling, those sectors you can't invest as a subsidiary.